The good news, more than 25 million workers have more than $1 trillion invested in 401k plans nationwide. Bad news, many of those folks socking money away in their retirement accounts are getting ready to retire, which means they either have to start taking money out of those accounts or figure out a new way to invest that cash. Here to help us with that dilemma is Lance Roberts with Streettalk Investors. Good morning and thank you for being here. Now, when we've got a situation, thousands, millions of baby boomers right now are turning of age. They've already socked money away. Are they supposed to take the money out when they reach retirement age, or what do you do with it?
Well, you've got a couple of options. First of all, you don't have to take your money out of your 401k plan. In fact, if you're retiring early, for instance, with an IRA, you can only take money out once you reach the age of 59 and a half without a tax consequence. There's a way around that called Rule 72T, which is substantially equal payment. So you can actually access an IRA early to take money out, but there are some rules requiring how that's done. However, with a 401k plan, some companies will allow you to actually access your 401k plan as early as the age of 55. There are some rules and requirements about how you do that as well, but you're not required to take the money out of a 401k plan once you retire. That's one side of the story. In a lot of cases, though, however, it's very important that you structure your assets to provide an income stream for the rest of your life going through retirement to make sure you don't run out of assets. And generally speaking, you're much better off transferring those assets once you leave the company, transferring those assets into an IRA, an individual retirement account, because it allows you a greater flexibility of investment options such as individual bonds, certificates of deposit, things that will guarantee principal and create an income stream to support and supplement your lifestyle through retirement.
But in retirement, are there some limitations? Aren't there limitations on how much you can put into an IRA?
Well, no, because once you actually retire, you're going to no longer contribute to an IRA. So it becomes a non-contributory account because you're no longer working. See, the only way you can contribute to a 401k or an IRA is with earned income. So once you retire and you're no longer working, of course, then you can start taking money out of that IRA once you pass 59 and a half. And again, you know, there's no reason, you're not required to transfer it to an IRA. Just like I said, though, you have much better options for creating an income stream, generally in an individual retirement account or some type of tax-deferred vehicle outside of a 401k plan.
So what if someone wanted to really increase their money? Should they take money out of the accounts, the 401k or the IRA, and go to the stock market possibly?
Well, it's
risky, though.
Well, it is risky, but in an IRA, you are invested in the stock market. In an IRA, you can invest in anything, stocks, bonds, mutual funds, certificates of deposit, tax-deferred annuities, just about anything you want inside of an IRA, just like you do with your 401k plan. You know, in your 401k plan, you've got mutual fund options, but that's the problem. In most mutual funds, unless it's called an open platform, and there's very few of these around, you can only invest in a certain set of mutual funds. And so you're kind of limited on your options. But yeah, within an IRA, you can invest in anything. And so yes, it's the very important point about all of this is it is important how you invest, because you have to combat three things: your withdrawal rate, how much you're taking out of your IRA every year, you have to combat inflation, and you have to protect the principal.
And that way you'll be okay once you pass retirement age.
Exactly. Well,
fingers crossed, though.
Well, yeah. The whole trick is not to run out of money before you pass away. So
exactly. Lance, thank you so very much for joining us here and sharing a little bit of information. Hopefully some folks got some nuggets out of it. It might help them out.
Well, thank you so much.
Including myself. Thank you, Lance. Patty.